I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Welcome to another episode of The Key to the City of Angels. I'm your host, Rick Albert, and today I have the amazing Natalie Salins of Movement Mortgage, and also the podcast of, it's called Mortgage on My Mind. Yeah,
there it is.
Sorry, dodging. There you go. Which I had the honors of being on your podcast. It was a great time. So I appreciate you now hopping on mine.
Absolutely. Looking forward.
Yeah. So let's start off with, how did you get into this? How did you get into mortgages?
Mortgages? Oh my gosh. I just was always really good at numbers. You know, I was with a friend who did mortgages, super old school mortgage broker, and she could like work anywhere. And I was like, what is that? What are you doing? And, and I would hear her on the phone. I'd be like, I am calculating these numbers without even, like I've always been a numbers person. And I was like, I really feel like I could be very good at that job, not also numbers, but a problem solver and always thinking outside of the box for everything. And that's kind of what you need in a mortgage broker. So I got into it.
I've noticed that when I've been with clients and we're looking at properties, like I had one where the property didn't appraise. And so I asked the lender at the loan officer, I was like, can you run the numbers if you raise the rate and you give the buyer credit, like a lender credit? And he's like, holy shit. Not only did it, because rates were already going up. So basically he just matched what the new rate is, which means if we cancel, she'd be paying that rate anyways.
Right.
And she got enough money not only to cover the difference from the appraisal gap, but also part of her closing costs.
Interesting. Okay.
Yeah, it was a rare time.
I like the idea, just it depends on the spread.
Right.
So there are times that investors are selling a rate specific to making money up front.
Sure.
So they make the spread really, really big. So let's say zero rate is 7.8 and 1 point in cost is 6.8. This investor is specifically pricing to make the point up front, right? They want that money up front because they know that this loan is temporary and they want to make some of their interest now instead of wait. You know what I mean? Because they're not going to make it on the back end because people are probably getting out of these loans in the next year. So a lot of the time when investors are pricing that way, where the spread is really big, that means if my 0 point is at 7.8 and I need to give her or him a credit, 1.1% of the loan. So say $1 million loan, I need to give them a credit of $10,000 for the discrepancy in appraisal. That could be a really huge jump to get that 1 point. It just depends.
Right.
Sometimes it's nothing. Sometimes to get the 1 point is 0.25% higher in rate.
Yeah.
And that's when it makes sense, when things are priced that way. Where like 0 point is 6.8 and 1 point is 7.1. Then you do the 7.1, you get $10,000 back. But it just depends on how rates are being sold.
Yeah, I'm actually guilty of that. When I bought my first place, I raised my rate as high as possible to get the biggest lender credit I could, knowing that I was going to fix it up and refinance in a few months.
Right.
So yeah, totally get that. So what's great is that you're based here in LA. What have you been seeing, happening with your clients, the conversations you're having, offers getting accepted, things like that?
It does feel a little bit busier, which is great. Knock on wood, it feels like things are happening again in the city, even regardless of the, extreme misfortune of the fires and such.
Right.
But we're seeing kind of a not too huge of offering over at this point. I think it's kind of a fair market where people are offering above, of course, always in LA. Nothing too extreme, of like 100, 200, 300,000 over. And so we're seeing, the market kind of shifting in a very regular way, maybe 5 to 7% up a year or so.
hmm You mean what we call the new normal?
Right.
Yeah, we're seeing the
It be
same thing.
15 to 20. Yeah,
Yeah, right. Like it's great to have a listing sell in a weekend, and go over asking. But like if it takes a little bit longer and prices start to stay, like that's give buyers also a chance too,
exactly. Exactly.
right?
It's kind of buyer and seller market right now.
Right, we're
Not one or
starting to
the
get
other.
that way,
Yeah.
right? Which is kind of nice.
Yes. Yes. It's about time.
I know. I'm showing some properties tomorrow, and yes, some of these like just hit the market. Some have been on like 30 plus days, and it's like
Mhm.
okay, and like why hasn't it sold? I'm like. Usually it's either the price or because of the agent, but we'll find out.
Exactly.
You
Exactly.
know?
Yeah, I have clients right now that offered on something that's been on the market 90 days.
Yeah.
And you're like, wow, I wonder what happened there. And they won't accept anything below list price, which is so interesting. You're like, I mean, you're not
Yeah.
getting it, honey. You're going to have to rethink your
Right.
strategy. Like, because they offered lower and only by like 40,000 lower or something, but they offered lower and the seller came back and was like, no, we want our list price. And they're like, well,
Yeah.
I guess you're going to keep waiting
It's
for it.
exactly. I see a lot of that. It's usually the sellers that have very low interest rates.
Of course.
So they're like, well, I can carry it. I can hold on to it until I get my price. But
Yes.
it's like, have you actually done the numbers? If you took this much less versus staying on the market for another, 60 days, is it a wash? I usually do that actually with my sellers. I probably shouldn't be saying this in case buyers agents are listening, but when I get like requests to write credits and I'm representing the seller, oftentimes they say is like, okay, what are your carrying costs? All right, my carrying costs are 3 grand. All right, the request is 2,500. If you don't accept this, if they cancel, you're spending another 3 grand anyways in carrying costs.
Yes, exactly.
So it might be worth to entertain this just so everyone can move on.
Mhm. Totally.
Yeah.
Yeah.
And most of my clients tend to be on the more logical side. So they're like, yeah, that makes sense.
Mhm.
Yeah, like, okay.
And that's all it is, right? It's if things can make logical, rational sense, the numbers,
Right.
then you've got so many different routes that you can take things.
Right. I mean, what are some of the hurdles that you're seeing with your buyers? Like when they do the consultation with you, what are they like either scared of or where are they, I guess, the pain points that you're
In
seeing?
points is not a lot of money in the bank.
Hmm.
And I just got off the phone with a buyer that was like, basically if they have to come up even with closing costs, they'll get it from family because there
hmm
isn't really much. And that's the good part about lending is we have so many options where you don't have to have a lot of money. And she's
Right.
like, I know we can't afford it. I'm not sure what I'm thinking. And I'm like, well, let's actually look at it. Let's talk about it because you just might be able to do it. When it comes to qualifying for a mortgage, it's about qualifying for it. It's about the income, not
hmm
necessarily the down payment. There are programs for down payment assistance and other things. It's much more if the income that you show legitimately can cover the payment.
Yeah. What have you seen? Because like I've had clients ask about the grants, and we started looking into them, but I haven't had anyone pull the trigger. And then when I've represented sellers, I've been getting a lot of agents coming through saying, "Hey, they're doing, oh, is it LIPA, the low income program assistance?" But
Tough.
they're
Yeah.
like, "But it's going to take 45 days, 60 days, and the seller might have to do certain things to the property." And I'm like, "You're not selling it real well."
They're tough. I am licensed with LIPA and MIPA, which is low income payment assistance or
Mhm.
moderate income payment assistance. After you are completely clear to close as a lender, the
Mhm.
entire file is packaged and sent to the county. And then they can take 2 to 3 weeks just to review it.
Interesting.
And then they have conditions. And they need their own inspector on the property, regardless of the appraisal. So that's why he was saying, because they will
Mhm.
go out to the property to review it after having seen the appraisal. And then they can ask for certain things on the property. It's a real sitch. It's a real sitch to close one of those. I've done it, but it's not fun for anyone.
Oh, it does not sound well. So that means if you're the seller, because normally you have contingencies, right? The default 17 days. More often than not, they try to shorten it. In your case, you almost have to extend it.
Yeah, of course. Because that's the scary part. So I always tell buyers, listen, we can do this MIPA or LIPA thing, but we have to know that you can get a loan if this falls through.
Right.
Because we cannot, unless you are going to find a seller who will do no contingent, like take the contingency until the very end.
Yeah.
We don't know if the city is going to give you this money for a good 45 days.
Wow.
So it's just, it's a hell of a program. Yeah.
I'm
You have to
sure.
have the backup. You could say, we could try. If the seller's willing to wait, we can try, but you have to have a backup so that you're still in.
Yeah.
If that doesn't happen.
Yeah. And in the city or county's defense, like they're probably backed up. And this stuff is probably complicated.
Yeah.
Not that it couldn't be automated, right? I mean, in theory, it could be like, all right, upload all the paperwork, artificial intelligence reviews it all, and then it's like, yeah, you're good.
Mm-hmm.
In theory.
Exactly.
Yeah. I mean, otherwise, where are people sourcing the down payments? If they're not doing that program and they're short on cash, is it mostly family?
A family with gifts, seller credits. So we've got programs where you can do 0% down, or there's always CalHFA, which will give you 3% down.
Mm-hmm.
So you can do a 3% down program, and then you have to come up with closing costs. Sometimes you can have the seller help you with that.
Sure.
You know, you structure the contract based on getting money back.
Mm-hmm.
So there are ways, you know.
Yeah. Are you seeing a lot of sellers giving these credits up front? I guess if it's been sitting on the market long enough.
Yeah, totally.
Yeah. And I would, but where, like, I guess in what types of markets are you seeing that happen more? Like, you're not really going to see that in Beverly Hills, but no, right? But you might see it in.
Nobody can buy anything in Beverly Hills if they don't have money, you know, like.
Right. Yeah. You're not doing FHA. You're not doing 3.5% down.
Yeah.
Like, that's just, not happening. Yeah. So like where are these types of, I guess, buyers looking? Are they looking in northern LA, San Fernando Valley, or in other counties?
Northeast LA, a little bit south, north. Yeah, just on the outskirts.
Yeah.
I have somebody who just got into escrow. It's a little bit of a cosmetic fixture, of course, but in the hills in Lincoln Heights, beautiful, 600,000.
Yeah.
It's awesome.
Yeah.
I mean, it needs like 150 in work, but at 600, it's fantastic.
You get over it.
Yeah.
Yeah. I've seen there's a lot of character homes south of the 10.
Mm-hmm. Of course. Yeah. West Adamsy and stuff. It's gorgeous.
Oh, yeah. Yeah. I heard, and I don't know if it's fully accurate. I heard West Adams used to be kind of like the Hancock Park of LA. Like that's why there are so many bigger homes there. And then something changed, whether it was the LA riots or whatever. And then it was like, it wasn't until a few years ago that was rated one of like the hottest markets in the country.
Yeah. Yeah. It definitely came back into the market. It's beautiful.
Yeah.
Yeah.
Oh, yeah.
I mean, it's all flatland and stuff, but the houses are great. The streets are so wide. Like it's just a great place to live, and it's becoming, very hip now.
Yeah. Right. Because that's what we all want. We're in LA. We all want to be hip.
Yeah.
Wear, sweatpants, have a matcha, like it's cool.
That's right.
Right. That's
Gotta
right.
have a coffee shop. Mm-hmm.
Absolutely. Yeah. When we got back from Europe over the holidays, like they dress totally different. Like they actually take time.
Oh, yeah.
Right. Here it's like people with Lululemon, and they just throw stuff on.
What do they say? Like, are you hot or are you homeless?
Right.
That's like a thing. I saw that on, yeah.
Yeah.
Mm-hmm.
I try to do hybrid.
It's true.
Right. Especially with these calls. Like, okay, I just have to make sure I look good from the waist up.
We know how to Zoom now. Yeah.
That's right.
Professional Zoomers because of COVID. Yeah.
For sure. So what else are you seeing with their buyer in terms of, because I've talked to some lenders and talked to some of my clients, and yeah, the down payment is difficult, but it's really is the qualifying side. If the median income, I remember when I bought my first place, I was making less than 100K a year at the time. And I qualified, but at the time condos were selling for 200,000.
Yeah.
That same condo is now selling for probably close to 5.
Right. But then the income that you were making then at 100 should now be 2.
It should be. I have to
10
check my
years
tax
ago?
returns.
But what I mean? If it's 10 years, then it does kind of equal out. I mean, in LA, it's very hard. You can go from something worth 300 to 500 in just a couple of years. But on a standard, the income, like you were
Has been
saying,
able to keep up.
10 years ago, making 100 grand was a nice living. So being able to get
Right.
into something at 200 even seems really low.
Right.
Most people would go for something in the 400 range, making 100,000. But the hard parts with qualifying people are the self-employed income, of course.
Mm.
Our city has had it a little hard with the strikes and people not really getting back to work who are in the entertainment business. And so I'm literally emailing a client, like not right now, but like right
Yeah.
before, and he hasn't started a job yet this year. And his last job last year was May.
Ouch. I've been hearing a lot of that.
And so he just put in the email. It said, you can't use any of my income from all the years I've had income. Like I just don't get included. And unfortunately, until he gets on a job this year, we will not be able to include his income because it's too long of a gap.
Right.
The gap is over 6 months. So it's not like he's just on hiatus anymore. That would be hard to
Mm.
get an underwriter to believe.
Right. And I think that, and correct me if I'm wrong, part of the disconnect with a lot of buyers is you're asking a bank to give someone hundreds of thousands of dollars at relatively low interest rate, right? Conceptually, like I wouldn't let someone borrow my money for 7%.
I tell people that all the time. Are you going to give somebody $1 million with redacted bank statements?
Right.
I don't think
And
we're asking for that much. Like you're asking for $1 million. We're asking for bank statements. Like, because
yeah.
people are like, I'm not giving it to you without the account blacked out. And you're like, I mean, okay, well then we're not going to give you a loan. No one's going to give you a loan. You cannot have redacted, you're like,
Right.
but it's also like, why? I mean, what would it take for you to give somebody $1 million? You probably would want to see that it's a legitimate bank statement.
Yeah, yeah.
You know,
Yeah. I totally agree. So there is the entertainment industry where the majority aren't. I've been hearing that jobs are starting to pick up because I have clients in the entertainment industry. We actually had talked about selling their house because they're like, well, we have savings, we're good, but I
yeah,
also want to prepare for the worst.
right.
And I actually have another client who's in the entertainment business. He's been busy, but he's been doing commercials. So he's on like those are like local. Everything else is being pushed overseas, is
Yeah.
really what I've been hearing.
Commercials in reality tend to stay steady.
Yeah, that makes sense.
It's all the scripted stuff that really like just takes a toll.
Yeah.
From what I can see with my clients, the ones that are still
Right.
working consistently.
Right. We're not in the industry, so to speak.
No.
So, yeah,
Yeah.
but I've been hearing the same thing. It's like, these other countries are providing all these tax benefits and all that to film and, one thing after another. So, for the other clients that are self-employed, I mean, I guess the question is really, has the economy been doing well enough to where these people are like they're struggling to get loans just by virtue of being self-employed, but it's not necessarily any different than what it's been over the last few months?
Not necessarily.
Generally.
Yeah, I
Yeah.
think, a lot of people, the strikes were actually in 22. So
Right.
last year people were still trying to recover. Some did not do that well, some did. And then even into this year, it's just starting to pick back up again. So it really depends on how they file their tax returns and stuff, but
Right.
it's been getting much better. I've had already this year 3 clients have to file their tax returns already. So January 2nd, I was like, we're doing 24s. Ready? Talk to your accountant. When can we do them?
Right.
I need your 24s to qualify you because 23 was not good. So let's do this.
Right.
And I literally 3, it's only February 20th, and I've had 3 separate escrows in escrow where I get into escrow. I don't have a filed return. We're going off their drafts. I'm getting them full underwriter approval based on the draft. And just before closing, they need to file.
Yeah.
And
Yeah.
then
I
that's
can
it.
imagine.
And we're going off 24s.
Or for some people, maybe it's the opposite. Like, hey, you had a really bad year. Don't file yet.
All the
And buy in
time. I'm like, hey,
buy
guess
in
what?
January.
You have till October 19th to get
Right. And there you go. That can be a marketing ploy in itself. It's like, had a bad year, but still want to buy.
Uh-huh.
Yeah.
It's
Push out
That's why
within
when people are
reason.
like, well, let me wait till 24. Let me wait till, and I'm like, listen, let me just look at your 23s so that I
Yeah.
know what we're starting with. Let me make sure that I understand what the income is. And then we can chat 24 and see which is the best way to strategize that, you know.
Yeah. Have you had a lot of like I've talked to potential clients where I was like, they're like, well, I don't know if I want to buy, not buy. I'm like, well, look, go through the pre-approval process now so you see where you stand. So even if you're not buying today, but you need to have a benchmark. And most people are like super hesitant to do that for a variety of reasons, credit, the effort, all of that. What have you like are people actually still having those conversations or are people like, no, I'm waiting until I'm ready to buy?
Always, you always get on the phone with somebody and they're like, I want to buy in the summer, or I
Yeah.
want to buy, next spring or whatever. And by the time you're done qualifying them and pre-approving them, you're like, I mean, you look amazing. You can go house hunting or you can wait, but I'm not sure why you would wait. Here's a cost of waiting flyer. This is what it
Mm,
costs to wait. This is what happens as time pushes, just logistically with numbers.
right.
And so a lot of the time people are just scared to jump in. So they just want to say, like, we're looking 6 months from now. But they're really not, because once you talk to them and they get like peace of mind on the numbers and they
Hmm.
understand their qualification, and then they're like, whoa, I can start now.
Yeah.
Most of the time they just jump right in.
I've heard that whatever a potential buyer or seller says, 6 months, a year, it's usually half that time.
Yeah, I would believe that.
Yeah.
Yeah,
So
totally.
have you noticed a difference in like people, I guess, applications this year versus last year? I mean, this year is very different in the sense that we have had the fires. Even if people weren't affected by the fires, they kind of just, the world just stopped,
Right.
right?
I mean,
Understandably, but the world just stopped.
it definitely did here.
Yeah.
But yeah, it does feel a little bit better this year than last, I'd say,
Yeah.
and better than the year before as well.
Yeah.
In
Yeah.
22, it was like, you know,
It
I'll
was
never forget
nuts.
January of 22. I had like three escrows,
Hmm.
which is very low for me, in 1 month. And when we closed that month, I was like, wow, this was a brute month. I had a lot of time.
Yeah.
I was like,
Yeah.
I'm so used to constant working, constant working, constant working. And then when, like, I remember that year just being like, I'd finish even into 23 as well, very much into 23, because rates got
Hmm.
at their highest at the end of 23,
Right.
high sevens, low eights,
Hmm.
where you're like finishing email and then nothing else is popping in. And you're like,
Right.
what am I going to do?
Yeah. Yeah.
You're
You're not
like,
doing refinances.
should I go like pick up my laundry or something? You're just
Right.
like, I can't believe this idle time I have. I just emailed all my leads. I followed up with like I'm doing everything that I can to keep myself busy. It's just an
Yeah.
interesting time.
Yeah. I remember when 2022 hit and the rates started coming up. I remember I had a client like lock in at like 3.99. And I'm like, this feels high. And loan officer's like, no, dude, this is just the beginning.
I know. I remember when we were at 5 and they were like,
Hmm.
5. And I was like, 5. Holy. And
Right.
I said, listen, guys, just get in. If the payment feels comfortable, that's what matters. If rates come down, we get you out of it. But
Right.
I would kill to see a 5 now.
Right.
And then I think, depending on if you pay a point or so, 5 is available, right? 5.9 is available right now with
Right.
FHA or whatever. But
Yeah. But it really comes down to how long you plan on keeping the loan at that point.
exactly. And
Yeah.
how much does that extra payment mean, let's say only for the next year or so?
Hmm.
What does that equal out to? You know,
Right.
how much would the house be worth a year from now? 10% higher or so, right? So potentially 100 grand more.
Yeah.
If you get in now with rates as where they are, and let's say they drop by a percent, which is, a nice amount. So that's like a difference of, let's say, 600 a month. So
Hmm.
now you're looking at 7,000 more in payment, but you saved 100 grand
Right.
in price.
Yeah.
And
That
now
was,
you've got 100 grand in equity, and now you're refinancing into the lower rate. That if you
mhm.
had waited, yeah, you would have gotten the lower rate, but at 100 grand more out of pocket. You know what I mean? So like it's just doesn't, you have to think of it that way.
Yeah. That's the conversation I've had with people. It's like it's all really about the payments.
Yes, exactly. Do you feel comfortable with it? Yes, it feels high, but
Right.
does it feel somewhat comfortable? And right now in LA, because of the fires, rents are so high.
Yeah.
So if someone is legitimately looking for rent, they're paying, unfortunately, but it's just what's happening. They're paying an extreme premium to rent right now.
Yeah. Even with the price gouging laws in place, assuming some people follow it.
Even if you follow it to a T, it's supply and demand. I mean, it's what somebody is willing to pay. Like the seller might be not price gouging, but the tenant, the renter wants to pay more just to get it. It's
Hmm.
supply and demand. It's, and then I've seen price gouging. I have a client that I spoke to yesterday a new buyer who was thinking of leasing, and she was put in an application before the fires at 5,900.
Hmm.
And after the fires, because everybody went on pause. After the fires, the guys came
Sure.
back and he's like, yeah, no, I'm putting it back on the market for 69. Sorry. And that's where you're like, I think that's illegal, right? Like
Very
for
much so.
but so she's like, if I'm going to spend 7,000 on an apartment or on a house, I'm going to buy it. And so
Right.
that was the conversation yesterday.
So maybe it helps our business on the buying and selling side.
It could be because it's just
Yeah.
not a good time to rent right now.
Yeah.
Things
And
stabilize.
oh, for sure. And we just did another episode with an attorney, and he was saying, there could be tenants who are willing to bid up on the rental side, but they have attorneys in the back behind the scenes that are just ready to be like, yeah, I locked in. And then the attorney's, you just price gouged my client. Yes, he was willing to pay more, but it doesn't matter. The law does not care.
So the law doesn't care, so you're not allowed, even if the person wants to pay more?
Correct.
Aren't you allowed to just go with the highest bidder?
Not right now because we're in a state of emergency.
And so is there a percentage you're not allowed to take it up?
10% is the limit.
10% of the
But that's where it
original
gets
listing?
that's a good question. That's where it
Yeah.
gets complicated. So I'm not an attorney, but I'll call it vague understanding because it does constantly change is whatever you had it listed for, you really can't raise it more than 10%. If
Oh,
you're yeah. So to
you
your
can't
point,
rent it for more than 10%, no matter what.
right, exactly. Now, if you're new to the market, because a lot of landlords were like, well, I'm not on the market yet.
Right.
They have to go, there's two options. One is if it's never been rented before, you have to go based off the HUD guidelines based on the number of bedrooms. Newsom made an exception for mansions recently because what was happening is, let's say, and I don't have the numbers in front of me for sake of conversation, let's say the max you can rent a 4 bedroom in Beverly Hills was $7,000 a month. But you're like, well, but my 4 bedrooms up in the hills with a view, this would normally rent for 50.
Yeah.
So all these mansions that normally would be for rent are now like, I'm just gonna let it sit vacant. And so they started making exceptions there.
Yeah.
And then there's some calculation based off what the HUD guidelines are. So those are kind of the two ways. And it doesn't matter if insurance is willing to pay more, doesn't matter if a tenant's willing to pay more. So your safest bet is, hey, here's the max you can rent it for. Don't ask for higher. And then it's an extra 5% if it's furnished.
Got it.
Yeah. I had to do all that digging because one of my clients has a property in Calabasas and it's full, and the current tenant is willing to move out. He's like, hey, I have another place. And guess what? Do you want to buy all my furniture? So we started running the numbers and he's like, well, yeah, I can rent this out for like 15 to 18 grand with furniture. But based off the way the laws are in place, his current tenant's paying 9 grand a month. So he can only raise it to like 10,300. He's like, I'm not going to
I
go
see.
through all this
So right
effort.
now, no matter whatever it's being rented at, currently you can't ask with a new tenant, you can't ask for more than 10% more.
That's my understanding of it. Yeah. Or at the
Like,
very least, that's the safest bet. It's
because
whatever
I
it was
have like
leased
a
for.
tenant that isn't paying any rent
So yeah,
for
that's a good
five
point.
years because of the moratorium. I haven't been able to get her out at all. So she has
Right.
literally not paid me in 5 years.
Right.
So once all this chaos stops, I'll be able to get her out. She's
Yeah.
paying very little because I got her into the property 10 years ago. So
Hmm.
right now, if I try to re-rent that, I would only be able to charge 10% more.
I think so.
I know that we passed the law just recently to not have that. What was it called?
Oh, Prop 33. But that
Right.
was before. This is all because of the fires.
This is right. So this is
This is
temporary?
correct.
Okay.
Yeah, this is all because of the fires, because we're in a state of emergency. Once we get out of the state of emergency, it's our understanding that it's business as usual.
Got it. And that should be somewhat soon, right? Like 3 to 5 months?
Probably. I know there is some eviction freezes for fire victims up until like March 8th, assuming they don't extend it. City council keeps putting certain eviction protections up for a vote. They keep getting delayed because of smart people like John Lee. So shout out to him who
Mhm.
knows that it's like, look, when we put all these eviction moratoriums in place during COVID, it screwed things up. So this needs to be really well thought out if we're going to go through all this again.
Right.
So yeah, it becomes a challenge, which again, it's kind of like, well, it almost puts everyone on pause,
Yeah.
right? If I'm a landlord, it's like, yeah, I'm not really going to go through this dance of putting my rental back on the market. Or if it is, it's going to be 10% more. And so hopefully that will encourage some to buy,
Right.
right? Which some might.
Right.
All right. I mean, we'll see. I've been noticing I've been getting more calls on the buy side over the last
Yeah.
like couple weeks.
Yeah.
And part of it I think it has to do more with household formation. I don't know if you've been seeing a lot of that. It's like in other words, hey, we just got
Not big
married.
enough. Yeah.
Yeah, or like we just had a kid or like it's just kind of like the adult thing to do,
Yeah.
right? It's like, oh yeah, adulting is to own a place.
Yes, exactly.
Yeah.
Or just that they have a child now and need something bigger, or yeah.
Yeah. No, that's exactly what we're at least we're starting to see on my end.
Yeah.
So,
Yeah, because they rent something and they want bigger. And
yeah,
again, the rent right now is really
it's rough.
rough.
Yeah, and some people might actually if they actually understand all the tax breaks, it's an advantage,
Yeah.
And I've been seeing a lot of cash buyers too, which I thought was kind of interesting. Yeah. I was like,
That's interesting.
good for them. I have a client escrow right now, cash, just got a call from another one, cash, and it's their
Oh
primary
my gosh.
residence.
Wow.
That's the wild part. It's like it's their primary residence, but I think a lot of them are waiting for this potential rate to go down. And if the rates go down, then they'll do the refinance. But I mean, I don't know what you've heard. It almost like doesn't matter what people are predicting because last year everyone predicted and they were wrong.
Totally.
Yeah,
Well, the Fed made us. I mean, it's-
right.
they told us all
Yeah,
the information that we were saying and, took it away. But
exactly. I mean, what conversations have you been hearing about rates on your end?
that we're holding steady, probably, I
Yeah,
would say till Q3, Q4. I mean, everything right now is pretty damn chaotic and volatile. Like I like have no idea what's going to happen in the economy with tariffs and everything. I mean,
right.
every single day is a new insane day right now with the new
Hmm.
administration. So I think that there is no real way to understand what's going to happen with rates until we see what happens, globally with what happens
Right.
with tariffs and stuff.
Well, it'd also be interesting to see because, like, what I've noticed over the last I'd say 12, for sure, the last 12 months, 24 months, is like fixers have not been flying off the shelf like they used to.
I
Obviously,
think that too.
yeah, obviously,
Investment
investors,
properties. Yeah.
yeah, like an investor will pick it up for the right price,
Yeah.
but like for an owner user to buy it, they're still paying much more, but those are taking longer and especially because of the fires, we're probably going to see cost of construction just keep going up.
Mhm. Yeah.
And I wonder how that's going to affect a lot of buyers. Because to your point, you have clients buying a light fixer. You're saying it's going to cost 150 grand. That probably sounds accurate. But it'll be interesting to see if buyers are like, yeah, this is going to cost a lot more than that.
Yeah.
And it's going to slow things down.
That was the thing. I had a conversation with these clients that they're going to close standard loan and then they're going to immediately refi into a renovation loan because they want to
Mm,
finance the renovation.
sure.
And they were like, well, how long do we have to keep that loan before we can refi into something smaller. Well, now we have more equity because the home is renovated.
Hmm.
And I was like, well, I mean, you can refi anytime, but you're not going to be done with that renovation for like
Right.
8 to 10 months minimum. So anytime you want to refi once the renovation is done, it's going to be
Yeah.
plenty seasoned. Yeah.
Sure. What renovation loans are you seeing people doing right now? Because I did the FHA 203K on
Hmm.
my property, which was a pain in the ass loan, but it got the job done.
Yeah, it does. And it's most of my clients, escrow is normally hard if you do it through an escrow. It's
Hmm.
easier if you refi renovation because, you have plenty of time and there's you know, not as much pressure. But the Fannie and Freddie have the same thing as FHA 203K and it's called home style. So if you have
Hmm.
more equity or more down payment, even just 5%, 10%, then you're not paying the mortgage insurance that you do on a 203K. So
Mm.
that's a better, in my opinion, that's a better financing option for renovation.
Yeah. Okay. But that one has a lower dollar amount, right? The home style?
Mm-mm, no, same.
No.
It's totally same terms. Yeah.
Oh, interesting.
There's streamline and then
Right.
consultant for both.
Right.
Yeah.
Yeah. Okay. Interesting. Because for those listening, so the Streamline FHA 203K, the limit's like what, 35,000
Mhm.
worth of renovations? Yeah. We did the full blown because we did like an addition, remodel, converted the garage to an ADU.
Oh,
Yeah. I've had another client do it. The challenge that we've seen, I think, going forward has really been the appraisals because it's based on future.
always, especially with ADUs. So now that everybody wants
Right.
an ADU, and I did one last year, a renovation purchase to
Hmm.
build an ADU on the property.
Right.
And I said, you guys, this is going to very much depend on what the value comes back in as an after value renovation. Like before we even got into escrow, I was like, start pulling comps right now. What in the neighborhood has an ADU? Is it worth 300,000 more? Because building the ADU is going to cost you two, and then we need
Right.
equity. So like, what is a single family without an ADU in this neighborhood? And what is a single family with an ADU? And
Hmm.
does that give us enough room for you to renovate and put a loan on it? And
Right.
it did. It was amazing.
You're like,
They
what?
bought the house for like 950. The loan ended up being 125, like they put 300 in,
Huh?
and it valued for like 147.
That's amazing.
I know. It's amazing.
I remember when I did mine, I was talking to the appraiser. He didn't know what an ADU was. I mean,
Oh,
this was like 2018, so like they just came into play in 2017.
yeah.
And so I had to explain to him and blah, blah, blah. So basically what he did was he gave me $10,000 in value for the ADU, but then subtracted 10,000 for not having a garage. I have no idea how it appraised, but it did. I'm like, this is weird, but okay.
I was just gonna say, I mean, if it appraises, who cares how? But
Right.
yeah, I hate when an appraiser gives me value for an ADU and gives me like 50 or 70.
Yeah, that's super common.
Nope. Nope, nope. That is not
Yeah,
what it takes to build an ADU anymore.
I know.
And I think it just depends if the house is an ADU that was just a guest house that they turned into an ADU, then maybe
Hmm.
it's only worth about 50 to 70. But if it's a brand new build ADU, that is expensive. It's a second house.
I know.
And you
I
can't use any of the GLA.
hmm.
Honestly, Fannie and Freddie think of ADUs as a glorified guest house. That's it.
Right. Just like they would do a pool or whatever. Yeah, I've seen appraisers when I did my HELOC, the appraiser came through. Actually, no, it was a drive-by appraisal on that one, which already pissed me off because I was like, you have no idea about the amount of work that went into this house.
No, you have to
Um,
ask specifically not for a drive-by. Yeah.
right. And so he combined the total square footage is how he did it. So he did the ADU plus the house. Right. So it's like, okay, yeah, 1900 square feet or whatever. And I'm like, no, this has way more value if it's separate. So I got another appraiser to come through and it appraised for $30,000 more just
Wow.
by having it singled out
Yeah.
differently.
Yeah. And you're really
So
not supposed to. I mean, that's really not a legal way to do it.
I know
Yeah.
it's a lazy way.
Well, it's just not legal. I mean, it's not gross living area. It's just
Yeah.
not.
Yeah. What, heading towards appraisals, what have you been seeing? Like I haven't had really appraisal issues recently.
Knock on wood. I
I
don't
know,
even want to
right?
say it. I don't even
I
want to
know.
say it.
Damn it. I'm sorry. Yeah, right.
Uh-huh.
Yeah. But have you experienced a lot of appraisal issues, stuff coming up?
Um,
Not really,
I
right?
can't even say it out loud. Mm-mm.
I know. Knock on something.
Knock on something.
I wonder if that a lot of that has to do with the fact that we're not seeing the massive
That's the
bidding
thing.
wars.
And I had a client that almost offered in Pasadena on something. Initial offer, she was doing 300 more. It was like listed 1-1. She was going in at 1-4. I was like, what? I haven't seen this in forever.
Yeah.
You pulled comps? And she's like, yeah, yeah. And she sent me the comps, and I'm like, these comps are not like you're giving me
Right.
comps in Pasadena, and some houses are 1-7 in Pasadena, and those are, you know, 1-7, 2-2, 2-5. Those are different kind of houses than this house that's at 1-1. Which is
Yeah.
like jammed shut close to the next door neighbor. It's not El Molino Drive. You know what I mean? Like you have to, if you
Yeah.
understand the neighborhood of Pasadena, it's a very different kind of thing. Some homes in Pasadena are incredibly palatial, and then some are just a house. All of them are worth quite a bit of money, but to go in
Sure.
so high, and sure enough, it scared the buyer and she backed out. She didn't write an offer.
Yeah. I mean, it's just you save everybody time and money. And that's usually the conversation I've had with listing agents where I'm like,
Yeah.
look, it's not going to appraise. And I don't feel like going into escrow, doing the appraisal, doing the inspections, and then have to go through this dance. I'm not trying to
Yeah.
be disrespectful. I'm trying to make sure that we close,
Yes, I know.
right? And those are some of the conversations.
Totally.
Yeah. Now, oftentimes, I don't see it actually as much on the listing when I'm representing sellers, but when I represent buyers, we usually have loan officers call the listing agents, right? To say, hey, look, they're qualified. What conversations have you been seeing when you've been making those calls? Assuming you're making those calls, I shouldn't assume.
No, I do.
Yeah.
I mean, just really, we talk about comps and we talk about, I have a system that I can pull
Hmm.
all the sold comps in the past 3 months in the area. And
Mm.
it gives me a valuation on the property, like an
Okay.
AVM, right? An
Sure.
automated value meter. And so a lot of the times I'm doing that with my buyers and my agents before we even start the discussion.
Just to kind of give like a range, a starting point.
Yeah, just be like, it looks like it's worth anywhere between 1-1 and 1, and these
Hmm.
are the ranges. How does it compare to the one that is at 1-4? Does
Hmm.
it, and we'll have the conversation beforehand. The one that's 1-4 has 2 extra bedrooms. So
Yeah.
I'm not so sure, but a much smaller lot and no ADU. So, you kind of just go through what the net adjustments are, and then you can have a much more informed conversation.
Yeah. I've noticed that a lot of agents aren't having those informed conversations. Like when I represented, I just closed on a listing and I had buyers like lowballing. And I'm like, okay, well, my sellers are logical. Do you have sales that can kind of support this? I'm sure there are. And I'm like, so you're just
Have you
lowballing to
pulled it?
lowball.
I know.
Yeah. Because here, I'm happy to show you comparable sales.
Yeah. It
And then
should
I
be
send it to
something
them.
when you are talking with a buyer, what you're going to offer, that has to be part of the conversation.
Yeah.
If they're getting a loan, it has to be part of the conversation, because what is it going to value at?
Hmm.
Yeah, great if you want to spend this much money, but if you need a loan to do it, then it actually does have to make sense based on what other people are willing to spend on it as well. Like
Right.
have to pull comps. It's so important.
Oh, for sure. And we're still having those conversations even with cash buyers because they know at some point they may get a loan.
If they want to, yeah, do like a
Yeah.
delayed finance. Yeah.
Right. The delayed financing is interesting. Can you kind of dig into that a little bit?
Yeah, I've got one happening right now.
Oh, nice.
Um,
Okay.
yeah, where they paid for cash just to get it done and get it. And
Right.
then, so it normally it's you have to finance within 90 days.
Okay.
Because when you first purchase, if you do anything before 6 months, it's kind of considered unseasoned and it's a cash out,
Hmm.
and there's a hit to the rate on those. So delayed financing it has to be closed within 90 days of the purchase. And we have to confirm where the monies came from and, you know, and then it's just a normal loan, normal
Yeah.
refinance. Yeah.
But you can't, what if, hypothetically, you buy a place for 1 million and it just happened to be a stellar deal? And so you do the delayed financing and you're like, well, it's actually worth 1.2, 1.3. So can I get a bigger loan? Can you do that
Yeah.
with delayed financing?
You know, I haven't really had that. I don't think so.
Yeah,
Again, because it's not seasoned enough.
that's what I thought.
I mean, if I'm thinking in my head logically that like that's what my new appraisal is at,
Yeah,
then why wouldn't we give you a loan for 1 million? If my appraisal
right,
is at 1.4, why would I not give you a loan for 1 million?
right. Yeah, I know years ago, because I had done it, where they said, okay, 3 months, and they were able to give me 100%. Now that I think about it, but I
If
wanted
you
more
paid in
money.
cash and you're just replenishing it, that's fine. If we're
Yeah.
doing delayed financing for a gift
Ooh.
or something that you are paying back in any way, you
Mm-hmm.
can't because then it is considered cash out into your pocket and you
Interesting.
are not allowed to cash out unless the property is seasoned 6 months.
Yeah, that's what I ended up having to do on
So
one of my
you can pay
investment
yourself
properties.
back as much as you want. So if you
Mm-hmm.
paid 1 million, you can pay yourself back the million, but you can't cash out of the house more than that
Got it. Yeah, that's what it
until there's a
was.
seasoned 6 months.
Okay, that makes sense. Yeah, because when I did mine, this was one of my out-of-state investment properties. I initially paid like 90K for it. It was a stupid good deal. It was listed for 180. I got it for half off.
Wow.
The seller was too lazy to install hot water heaters, so therefore it didn't qualify for financing.
Mm.
Yeah, I was like, right? He got full price offers. And I'm like,
Wow.
okay. Because I was doing 1031 exchange anyway, so I had the cash. But it ended up appraising for significantly more. And so, yeah, the lender at the time was like, no, you got to wait 6 months if you want to get what you paid for it plus all your renovation costs. Because that's really what I wanted. I wanted that money back.
Yeah, that's cash in pocket.
Yeah, right, exactly. So
Mhm.
we ended up doing okay. But yeah, it took 6 months. So yeah, I had to wait 6 months, which worked out
Yes.
because it's
Yeah.
all part of what's called the BRRRR strategy, right? So you buy it, you rehab it. So I had months spent anyways. Then you rent it out, you refinance, and then the idea is to repeat. You recycle the money. So in theory, you're supposed to get the properties for free.
Mm.
In
Mhm.
theory, doesn't always happen, but in theory.
Yeah.
So speaking of, a lot of those types of strategies on the investor side, right? Because investors have always struggled in LA because, when you're an investor, you're punished with having higher rates and points, and the rents are what they are. So, what have you been seeing in terms of some of those types of loans and loan programs for investors?
So there's a couple different ways, there's even renovation for investors, right? So you can
Oh,
do,
interesting.
because, FHA is only for primary, but the
Right.
Fannie and Freddie renovation, which is home style, they allow
Mhm.
for investor renovations, which is pretty cool. People don't realize that.
Did not know that.
Yeah. Yeah. And you can
Holy
put as little as
smokes.
15 or 20% down and do a renovation on an investment property. Flip
No
it, sell it,
shit.
do whatever you want, but you can get financing for the renovation.
That
Uh,
isn't a hard money loan.
no, no, Fannie and Freddie.
No kidding. Well, you learn
Yeah.
something new every day.
Yeah. The rate isn't great, but
Oh,
it's
yeah.
better than hard money and there's no points.
Right.
And escrow is more of a pain in the ass, of course.
I can
But
navigate
you
through
can
that.
do it. You can get if you are a new investor and you don't have all the wherewithal with the money and the this and the that, it's a great deal to do it to get your renovations financed for you.
Oh yeah, for
Yeah.
sure.
Yeah.
I mean, the conversation, my last client that did the FHA 203K loan, the agent was hesitant. It was multiple offers. So what happened was the house was basically move in. It was really the guest house was done with illegally. It wasn't done with permits. So we were going to do
Mm.
the FHA loan to get it permitted. So the pitch to the agent was like, look, some lenders may not like the fact that there's unpermitted work on the property. They may not like the fact on certain condition. This lender doesn't care because they're going to take care of it.
Right.
And that's
Exactly.
how we were able to get the offer accepted.
Right. Totally.
Yeah.
Totally. So there's that option. Then, of course, there's always DSCR.
Okay.
which I always do with clients that have multiple properties because
Yeah.
it's so much easier than setting up 10 properties in the system. I don't need anything. If the rents cover the payment, we're done. And even less than. I have programs now that if the even if only the rents cover 75% of the payment or 80%, we can do it. So it can fall under the 1-1, which is what we used to say. So like, let's say the rents are 4,000. Normally we say your PITI can't be over 4,000,
Right.
but it can now.
Isn't that
So
risky for the investor though? Like, why
when
would I
rates are
automatically
a
want to
little bit
lose
higher,
money?
you have to have more down and a better
Hmm.
credit score,
Hmm.
but it can fall under the 1-1 ratio. And I have investors that will do it. So it's so cool. Like if I already know they're putting a lot of money down because of a 1031 exchange, I'm not
Mm.
even worried about the rents. And we'll take the interest only payment. Like
There
we'll
it is.
qualify off the interest
There it
only.
is. Yeah.
So I can
Okay.
put them in an interest only. I can qualify them off the interest only payment. I have a 40-year amort. I can
Mm.
qualify them off that payment. I'll qualify them off the 40-year amort payment if that makes the ratios work better. Like there's just different ways to be creative and kind of make that DSCR work.
So that's interesting. So because if you're an investor, like, I'm not losing money. Like that defeats the purpose.
Right.
But thinking out loud, if it's like, okay, I intend on converting the garage to an ADU, right? So now I'm making up that difference, but I just need to get the loan today. That's the only way I could see why someone would be okay with losing money up front because they're going to make some sort of improvement to get total rents up. Because
Right.
otherwise, I'm not quite sure why an investor would want to do that unless they're really banking on appreciation or there's some tax benefit for losing money
Or it's a 1031 exchange kind of
and
thing.
they just need to park the money.
Exactly.
Yeah,
Exactly.
no, I get that.
Yeah,
Yeah, I mean, we have seen a lot of that too. People, because like, when you're pressed against the clock.
totally.
Yeah, I had two clients over the last couple of years do reverse 1031 exchanges where you
Uh,
buy the property first and then
yes,
sell.
I've heard of them. Yeah,
It's wild, super complicated, but that's why you have the exchange people handle it.
right.
But it's interesting.
Yeah.
I even had a client do financing with it, and
Oh,
they did cross collateralization financing.
yes. Yeah. Hmm.
Yeah, between the
Yeah.
old property and the property they're buying. So they basically bought the other property zero down, and then we turned around and sold the relinquished property, and it paid off the loan.
Right. Totally.
And it's like, yep, we're all good.
Hmm.
To your point, you start to get creative.
Exactly. You figure
Yeah.
out ways to do it. I have people who have done 1031 exchange and bought a primary home, but had the
Uh,
plans to rent. As long as you're renting the space, that's the same square footage
hmm.
as the investment property square footage you're selling.
Hmm.
That's the 1031 portion of it.
Oh, interesting.
Yeah, so she was going to live in the ADU
Yeah.
and rent out the front house, and boom, she did a 1031 primary.
Oh,
Investment
interesting.
primary. I know.
Yeah.
Yeah.
Well, it's also the dollar amount, right? So if you sell the house for 1 million, but you buy a house for 1.2, you're like, yeah, the million portion is being rented out. I'm living in the $200,000 portion.
Yes.
I've heard that as well. So
Hmm.
interesting. So what do you see? What do you think is going to be? What conversations do you see yourself changing this year with buyers versus maybe in the past, or are you having more conversations? What's like the big change in your business, do you think? And it could be nothing. I'm just curious to see what your thoughts are.
Definitely different discussions around insurance, of course.
Yeah.
I'm having to put like double what I normally would on insurance
Mm,
estimates, and that is changing how people qualify, of course.
yeah.
There's always rate conversations. That's all anyone wants to talk about.
Yeah. The insurance is kind of interesting. So have you had clients get caught up in it in the middle of escrow? Like in terms of like, oh yeah, we did not anticipate the rate being this high and it throws off their DTI.
Yes, yeah.
Yeah.
Hmm.
I'd
And
imagine
then we
we're
either
gonna see
bring
that
in
going
more,
forward.
yeah, we either bring in more money down or different
Yeah.
things that we've had to do. Hmm.
Yeah. Out of curiosity, and this is because I don't know and I always like to learn. I always do, and this is me personally, so it's not advice for other people. I always like doing really high deductibles for the insurance. Because if you pull an insurance claim, you're kind of SOL. Like if you want to buy more properties, they ask you if you've had insurance claims. So it's like,
Yeah.
yeah, if I had a small leak that cost me a few $1,000s, I'm not going to get insurance involved anyways.
Hmm.
Do lenders actually have a limit or a maximum of what you can have as a deductible, or do they not care? I have a client right now getting well, he was open to getting a $20,000 deductible on like an $800,000 property.
Well, obviously I've never seen anything quite that high.
Yeah,
No, as long as the coverage is there, you know.
that's all that matters.
Mhm.
Yeah. That's the conversation I have had with people. It's like, look, I'm not an insurance expert, and this is all predicated on you actually having the money in savings, right? The
Yeah,
last thing you want to do is put yourself in a tough spot.
yeah,
But a lot of my clients have just been bumping up the deductible amount to lower the payments,
right.
even if it's just $100.
Hmm.
It makes all the difference.
Yeah, totally.
So, what advice would you have for people right now who might be interested in buying? I don't really see much in the refinance space unless they're doing cash out refis. But like, what advice would you give?
To not be afraid, to jump in and
Yeah,
see what you qualify for, to understand the numbers better,
yeah,
um, to give yourself the space to understand what it looks like for you to purchase and own.
hmm,
Always. I think most of the time people just are afraid and don't think that they can do it. And I'd say 70 to 80% of the time we're making it work so that they can, you know.
yeah,
You very rarely meet someone who regrets it, you
yeah.
know. Like
That's fair.
almost everybody that I like keep in touch with that I'm like, hey, congrats, it's been a year, whatever, are like, oh my God, we're so happy we bought last year. Oh my God, we love the place. But you know, like you know, and the people that don't buy, the conversation is almost always, God, I wish I would have bought last year. I'm so mad I didn't buy 2 years ago. I'm so like, I cannot believe I'm sitting here and I put it on hold and we didn't buy. And I'm like, I totally get it, but let's not have this conversation a year from now.
Right. Let not history repeat itself.
Let's not do
When
this again. Yeah.
when the strikes happened in the entertainment industry, not this last one, but the one before that, was it 2020 or 2020? It was 2021, I think. I had a client in escrow and the strikes happened. She's like, I think I'm just going to cancel escrow. And I was like, look, the seller's willing to work with you and work through this strike. I can't guarantee what rates are going to be. At the
Yeah.
time, rates were in the threes. I can't guarantee what home prices are going to be, but unlikely they're going to go down.
Right.
And here we are today, and she canceled. That was her choice. I respect
Mhm.
it, but now she's priced out.
Yeah, exactly. I have people that just got scared last year. They were in two different escrows. One for like 1.2, one for 1.25. Both those properties are worth 1.4 right now,
I know.
you know.
Yeah, LA's known for
And the
appreciation.
same house that they want is now worth 1.4. So now they're
Yeah,
like, now we can't afford it at all.
yeah.
But last year they could afford it. And they got into escrow on it and just freaked out and backed out, you know.
Why
And
do
I'm
they
like,
freak
wow.
out?
First, I don't know. First time home buyers, the strikes, it was like a lot of they didn't like the pool. I don't know. It
Like,
was
oh, it
really
looked at me
unfortunate.
funny. Yeah, it happens. People get
Yeah,
cold feet.
yeah. But
It
now
happens.
it's such a different, it's like, wow, now you can't. Like you
Yeah,
really lost your chance, unfortunately.
yeah. Well, that's where, maybe properties like ADU properties, things like that, those might become more prevalent now that you can count rental income. And people are like, yeah, I had
Exactly.
clients who didn't want tenants on the property. And I'm like, what's the difference between that versus you buy a condo and a tenant living next door? Oh,
Right.
wait, you collect the money. That's the difference, right? You're the landlord. And it doesn't have
Yeah,
to be forever.
totally. It's fabulous. Somebody else is paying part of your mortgage. Are you kidding? Great.
Oh, yeah. At one point, our tenants were paying, well, they still are, the interest on our mortgage. So we effectively have a zero interest mortgage.
Right. It's a
I'm
good
like,
way to think
cool.
of it. Yeah.
Yeah. I was like, all right, I'm good.
Yeah.
Or when my wife and I lived in the ADU and our tenants were in the main house, they moved out and there was a lot of work that needed to be done. And I remember I was talking to, I think my brother or someone, and like, this is why I would never want tenants. I'm like, look, they lived here for like, I don't know, 3 years. I collected $72,000 in gross rents and I didn't have to do much with it.
Hmm.
Where in the world can you make $72,000 and not have to put that much work into it?
I know.
He has never brought it up since.
Yeah.
Right? So, Natalie, I really appreciate this. I really appreciate all the
Yeah,
insight, right? Kind of digging deep into what people are doing right now because things are
totally.
constantly evolving. How can
Totally.
people get a hold of you?
I think they're gonna put our name.
Your contact information will be in the show
Yeah, my
notes.
contact information will be
Yeah.
in the notes and stuff, I guess. It's my
Okay.
name, Natalie.Salins at movement.com.
Okay.
Kind of a
Perfect.
simple email. But as people know, I'm super communicative and they can text me, email me, and
Yeah. Just
um,
no smoke signals.
yeah.
Hey, too soon. Yes, no, you can't. No, I totally agree. Well, thank you so much for doing this. I really appreciate it. And maybe we'll
Absolutely.
have you back on soon. We can kind of
Would
see
love that.
what's changed.
Yeah, yes, exactly. How the market does continue to shift, which it
Right,
does. Yeah.
for sure. All right, thanks so much. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.